Welcome to part number 8 of this 10-part series with Bitcoin, where we're looking at the macro, intermediate, and the micro trend. Today, to maximize the money that we're going to make from the markets, we're going to look at the pattern position with Bitcoin. Now, what you want to know, because most people ask, is what drives the price? Why does it go up and why does it go down? And the quicker you can get your mind around the fact that it's crowd psychology, buying and selling behavior, fear and greed playing out time and time again. And typically, the markets tend to move in 5s and 3s. And in the previous parts, we covered a lot of detail in terms of price targets. And what we've said is since November 2021, we've been in a bear market. But as of the beginning of this year, we've had this nice impulsive trend up. And we're likely to see that the price is going to go into this range, but then have the next trend. But what we can really dive into and get a massive clue is the typical buying and selling behavior of what's likely to occur. And that can allow us to anticipate what action we should take, buying, selling, stand aside, and what the market overall is likely to do. So if you like today's video, like, subscribe, hit the bell notification. If you want to get more detail on Bitcoin, make sure you're taking advantage of my free Bitcoin report. It's timely updates that I do as a video report, and it just allows you to feel what the markets are doing. And when there's new information, I do a new update. It's free. It's in the link below. Do check it out. And by the way, we're going to finish on a quote of the day. We're doing 10 quotes of Socrates, so we'll check that out at the end of the video as well. So what we have, let me just remove these buy and sell signals. I'll tell you a bit more about those towards the end, is a reminder. We're on a weekly chart with Bitcoin. Markets tend to move in 5s and 3s. Impulsive trends, corrective trends, followed by the next impulse. And what we've had recently is a very clean 1, 2, 3, 4, 5. We're going to draw this out in a bit more detail. We are likely to see some type of A, B, C correction. We'll draw this out in a bit more detail as well. So this first leg just looks like the wave A. And then we're going to talk about the next leg. It might be a corrective leg. It might be a wave C. Or it might be a wave 3. We don't know at this stage. But in either case, the next leg would often break down into 5 waves itself, either equal to this or an extension of this. So let's now just make that very visual. So let me just get this tool over here. On TradingView, it's called Elliott Impulsive Waves or Impulse Wave. And we're going to take this low over here. It looks like a nice wave 1, a wave 2. It looks like a very classic overextended wave 3. A wave 4, and then a wave 5. And then it looks like we are forming the first leg of the correction, a wave A. We might get a new low this week, we're not sure, but let's just do it here for now. We have to forecast this because this information hasn't been confirmed yet, but we anticipate another leg to the upside. But then we do anticipate a further correction down. It's called a wave C. Because most common, and we want to go with the probability, is that you get a first leg down, a correction to the correction, and then the next leg down. It can be more complex corrections, but this is called an ABC zigzag. It's the most common, it's the most typical, and is what we should anticipate as the minimum. And then if this occurs, we want to label these. So it's making our thesis, our thinking, incredibly clear. And what I'm going to label it as is a wave 1 or A. Actually, let's just make it a bit smaller. Over here. Because wave 1s and wave A's, they look the same. They behave the same. So we don't need to articulate right now what is it going to be, as we don't know. We want to prepare for both. But it doesn't matter because both respond and behave the same. Over here, this has not been confirmed yet, but it's a wave 2 or B. Wave 2s and wave Bs are both corrective waves, and they're both typically ABC as a minimum, and they look identical. So we don't need to differentiate between the two right now. What we know in either case is that we are likely to get a follow through with this high getting exceeded and then these price zones getting tested. And that's what we want to prepare for. So what is most typical? Well, we've got the price zone. So this is the most common. It's the typical maximum wave C and the most common wave 3. It's a typical wave 3 and a maximum wave C. This is the most common wave C, right? So I'm leaning towards this. So we'll do the drawings on based as if Bitcoin is going to hit this as a minimum, which is 35,000. Now, there's a good probability that it's going to overextend to the 2.618 just because it's crypto and there's FOMO, fear of missing out, panic buying, euphoria kicks in, and all the positive news starts coming out and the money just starts pouring back in. So in fact, let's do the optimistic version of this, and let's actually draw it for the 45,000 range because that goes closer to some of the other projections that we're looking at. So what's most common is that it will look similar to this. As we got it down here, it will look similar to this, but the wave 1, 3, and 5 would tend to be further extended, right? 1, 3, and 5 further extended. So let's just draw that. Now we are totally forecasting here. We are predicting. There's no value in this because we can't make money on this right now. Just to emphasize, and my caveat is we need to wait for this to occur and see if it does occur. If the price does start to take off and trade into this range over here, if this occurs, then what I'm about to draw becomes very relative, very validated, and very important. Whereas right now, it's almost entertainment where we're just looking at what's likely to occur based on typical buying and selling behavior. Hopefully that makes sense. Right? Because look, we're looking weeks and months ahead now. So the further you look ahead, the less reliable it becomes. And as the market unfolds, literally then it's going to be much more important. Because something else could happen. And what I'm doing right now is just invalidated. But I'm doing it today with the 10-part series, looking into the future of what's likely to occur. So just so you know. All right, so now let's just look at this. We're going to get the first leg up, and then some type of correction. We'll probably get the next leg up, which will be a big extension. It's a wave 3. It's called a wave 3 or wave 3. Or a potential, shall I say, a wave 3 or wave 3. And then some type of wave 4 correction. And then a final leg up of a wave 5 of wave 3. That's what we're anticipating. Something like this. Something like this. Now again, we might only end up getting here, which is like the very conservative projection. We might end up getting here, and it might get overextended. But this here is the high probability zone. But as the market unfolds, then it becomes clearer to see. Now, a few things just to keep in mind. I'm just going to give you some guidelines. So there are some Elliott wave rules, but there's also some guidelines. The guidelines are when wave 2 is sharp, as in like it really goes down, wave 4 is more sideways. So again, I'm getting ahead of myself, but if this ends up being some type of very clean ABC sharp downward movement, wave 4 will tend to be more complex and be more sideways, right? And that's something that we just want to know. When wave 3 is the clear extended wave, as we've got over here, wave 1 and wave 5 tend to equal each other. So if wave 3 of wave 3 tends to be extended, we should find, and it's going to help us project the top and the end of the trend, wave 1 and wave 5 will tend to equal each other. And we'll just keep a real close eye on that as well. So with Bitcoin, this is the pattern position. Now we're getting a nice picture on what is very likely to occur. But again, I'm just going to, high probability, we need this to happen. We want to get confirmation, especially if this high gets exceeded, then this and these price and time targets become much more valid. So to get timely reports, one last thing actually, I forgot to mention. I want to also just emphasize, we would never just rely on one piece of information. Like pattern by itself is very helpful, but not that strong. But if we have that in conjunction with price, time, and momentum, all of a sudden, it's very, very powerful and very, very relevant. Now, I've created something called buy and sell signals included with a dashboard. The dashboard gives me a really, really clear interpretation of this information in English. So it just says it's currently in a bear downtrend. So the momentum is giving me sell signals to say, look, expect sideways to down and only consider selling positions, mainly because the momentum is down and the weekly trend is down. So when we're looking at this and these highs, we also want to look at the momentum position, the trend dashboard, and the buy and sell signals. And by the way, if you want to check out the buy and sell signals, I'll give you a full training on this, and you can now actually also test it out for £1 for a 30-day trial. Really, really powerful. I've just added some extra training now where you'll see how to do alerts, how to set alerts and schedule alerts. So when the reversals happen, you'll get an email notification, so you will never miss a trend again. So we're going to finish on a quote from Socrates. We're doing 10 quotes in this 10-part series from Socrates. He says, the only true wisdom is in knowing you know nothing. Another way of saying this, I can't remember who said this, but he said, when you know that you know, then you don't. And when you know that you don't know, then you do. Now, when it comes to trading, I like to emphasize that I don't know. So when I'm looking at, and it is, it's wisdom, right? It's being a sage, is to go, look, I've learned from my time on this planet and my experience with trading. And I'll give you a great example. I said not that long ago that this is likely to be a top, and then we're likely to get some type of correction with Bitcoin. However, I also said, if this high gets exceeded, we need to reevaluate. That's the only condition that voids the thesis. And it did make a new high. So we then said, look, I know that I don't know, so therefore it voids the wave count, and we just need to reevaluate. And when we reevaluate it says, okay, now it just looks like a very clean 5-wave structure. So there's no holy grail in terms of knowing 100% of what's likely to happen or what's going to happen, only what's likely to happen. So knowing that you don't know. So even when we are anticipating a 3-wave correction, I know that I don't know that this is going to occur. I know that I don't know, right? It's just a high probability outcome. It's like when you're tossing a coin, it's 50% heads, 50% tails. That's the chance. But we don't know which one it's going to be. It could be either, right? Whereas here it's just a higher probability. So when I hear Socrates and I'll read this quote, to me, the only true wisdom is in knowing that you know nothing. It just opens up the possibilities on really seeing what is as opposed to what you think is. So join me tomorrow for the next part. So tomorrow's next part is part 9. Let me just remind myself. It is some trade strategies, just some strategies on Bitcoin and some altcoins as well. If this unfolds as anticipated, what is Bitcoin's buying and selling opportunities and the rest of the market? How is the rest of the market likely to respond over the coming weeks and months if this occurs?